Welcome back everyone, Jake here. In this video, I'm going to explain for you why Russia has been buying up all the gold and what does this mean for the war in Ukraine, because this week the G7 met and they announced a total import ban on Russian gold. In effect, this was already happening, but this week they made it official, and any country participating in sanctions on Russia is not going to import or trade Russian gold anymore. Why is the West doing this? And it's mostly just to frustrate Vladimir Putin and disrupt the Russian economy. Russia's number one export, of course, is energy. This is oil, gas, and coal. But after that, it's mostly commodities: aluminum, platinum, and gold. Gold does bring in a significant amount of revenue every year for the Russian economy. When we look at their numbers as far as countries that produce the most amount of gold, as far as reserves in the ground, Australia and Russia are 1 and 2, but gold mining, who's pulling that gold out of the ground, China's being pretty aggressive right now, 370 metric tons pulled out in 2021, with Australia and Russia close behind. But interestingly enough, who are the 10 countries with the largest gold reserves already in their banks? And number one, of course, is the United States with 8,000 tons. Germany, Italy, and France are 2, 3, and 4. And Russia and China are 5 and 6. So I think very much that Russia and China are being more aggressive mining and buying gold because they'd like to see their reserves potentially being 2 and 3. So this story that's been circulating of Russia returning to a gold standard, where did this come from? And this dates back about 3 months. This article is from RT News. This stands for Russia Today. This is Kremlin paid for propaganda. And on April 2nd, they posted this article: gold-backed ruble could be a game changer. Linking the currency to gold and energy is a paradigm shift for the global economy, a precious metals analyst tells RT News. So let's just read the first paragraph here and I'll explain what the heck is going on. The Bank of Russia has resumed gold purchases this week, but more importantly, the regulator is doing so at a fixed price of 5,000 rubles, about 59 US dollars, per 1 gram between March 28th and June 30th, raising the possibility of Russia returning to the gold standard for the first time in over a century. So you'll notice this time period of June 30th, if this article was accurate, they would still be doing it, which of course they're not. So here was the original intention, the original plan by Russia's central bank 3 months ago. They wanted to, in effect, use gold as an intermediary of exchange to peg the Russian ruble to the US dollar. Very tricky. So if 1 gram of gold goes for $59 and Russia wanted to buy and sell it at a fixed price of 5,000 rubles per 1 gram, then in effect, 1 US dollar is equal to 84 rubles. This, of course, wasn't going to hold. This didn't last. Russia, of course, doesn't have enough gold in reserves in order to guarantee all the money they have in circulation. So within a week or two, Russia abandoned this scheme of fixing their currency to the price of gold. Last week on my channel, I made a video titled, "Why is the Russian ruble so strong right now?" And in that video, I didn't even bother mentioning gold because I thought it virtually had no impact on the price of the Russian ruble. So here it is. Let's check in on how the ruble is performing. The invasion kicked off on February 24th. The currency massively devalued as lots of Russians were trying to get their money out of the country in anticipation for sanctions coming. This is when Russia's government and central bank took extraordinary steps to stabilize or manipulate their currency, and it's almost worked too well as their currency continues to strengthen, and currently the value is $1 per 51 rubles. So 3 months ago, Russia attempted to peg the value of the Russian ruble to the US dollar using gold as an intermediary of exchange. They wanted this value to be 1 US dollar is equal to 84 Russian rubles. But this exchange only makes sense when the value of the Russian ruble is worse than $84. On March 8th, it got as high as 130. However, all of the steps that Russia's central bank took, they all worked in manipulating the price of the ruble, and by March 29th, the Russian ruble was 76 per 1 US dollar. So at this point, fixing the price to what was it, 84 Russian rubles, meant that Russia would be losing money if they were to continue exchanging at this rate. And Russia's currency continues to strengthen. Once again, today it's 1 US dollar to 51 Russian rubles. And this is actually a huge problem for Russia that I didn't explain in my last video. This is really interesting, so I want to quick share this with you. And the price of oil currently is $111. In effect, this is what is keeping the war in Ukraine going, as the Russian government is still bringing in plenty of money to fund the military, fund the government, continue the war. But as their currency strengthens, there's an unintended consequence. And here are the numbers. Let's see if you can follow along with this. Let's use nice round numbers and assume that the price of 1 barrel of oil is $100. And let's say that Russia's currency devalued slightly, and the exchange rate was 1 US dollar to 100 Russian rubles. How much money per barrel of oil is a Russian energy corporation or the Russian government bringing in when it exports energy, when it exports oil? 100 rubles times 100 US dollars exchanged gives the Russian energy corporation or the Russian government 10,000 Russian rubles in order to spend domestically. They need to pay their employees, Igor, Boris, and Victor. So, if the value of the Russian ruble appreciates and it goes down to $50 per 1 US dollar, Russia actually has a serious problem. If the exchange rate, once again, 1 US dollar to 50 Russian rubles, and the price of oil is still $100 a barrel, now the Russian government and the Russian energy corporation is only bringing in 5,000 Russian rubles in order to pay their domestic employees, the truck drivers, the pipe layers, the oil rig operators. So this hurts their domestic employment. Their energy, their exports for all their industries become less competitive, but if they're bringing in fewer rubles, it doesn't matter if the Russian currency is stronger. A stronger currency helps imports, but Russia can't import anything from the West as no one wants to do business with and no one wants to sell anything with Russia. So if Russia is bringing in fewer rubles because their currency is strengthening, they can only do two things. One, they can decrease everyone's pay and salary because, hey, your rubles are worth more. Go ahead and take a trip to New York, London, or Paris. Your money is worth more. Or they can let people go. They can lay people off because they're bringing in fewer Russian rubles to domestically pay for their employees. In effect, Russia might actually want to weaken their currency and inflate it because this helps with domestic employment. So here's the number. If it's 1 US dollar to 150 Russian rubles, this is greatly devaluing it, but domestically, they bring in 15,000 Russian rubles. There's now plenty of money to pay the truck driver and the oil rig worker. The Russian government and these energy companies would actually have more money if their currency devalued. Okay, let's now pivot back to gold and look at the charts over the last year because this is pretty fascinating. The price of gold, in anticipation for Russia's invasion of Ukraine, started going up, and the first week of the war, gold spiked probably about 10 or 15% to a value of $2,043 per whatever the spot price is. I forget, a troy ounce. However, since we're now 3 or 4 months into this war, the price of gold has gone back down basically to the level it was at all year. What's interesting about gold, though, is it is an effective store of value. When you look at other asset classes, such as cryptocurrency, Bitcoin is down 70% from its high. The S&P 500 index, the US stock market, is down about 20% from its high. But gold is not falling in value. Now, does this mean that gold is a good investment? On my channel, would I recommend gold? And I wouldn't, and this is why. Here is a logarithmic chart showing the value of gold over time adjusted for inflation. We can declick this to show you the true value, the true price over time, but you need to factor in inflation if you think it's a good long-term investment. And overall, gold is not a good long-term investment for retail people like you and me. I would much more recommend bonds, stocks, or real estate. You'll get a much better return over your lifetime. But for governments, gold is a good store of value. However, we don't want a gold standard similar to what we had prior to 1970 or 1930, depending on when the United States got off the gold standard. And the reason why is because when countries or people hoard gold, this causes deflation. Now, we don't really talk a lot about deflation in the United States because the Federal Reserve does everything it can to guarantee it doesn't happen. And generally, central banks, national governments, they want inflation in an economy to be between 1 and 2 or 0 and 2% a year. Why is this? If you think about it, let's pretend you have $100 and you know inflation is going to be 2%. So if you just hold that cash, if you hold that $100, then next year, because of inflation, the purchasing power of your dollar will only be worth $98. Your $100 will go down in value because of inflation. But let's now flip it and think about in an economy or a nation experiencing deflation. Let's pretend you're a billionaire, you have $1 billion, and deflation in your economy is 10%. Well, the purchasing power of your money is going to appreciate by 10%. So if you just hold on to that cash, if you hold on to that $1 billion, the purchasing power will be worth next year $1.1 billion. So this is why we got off the gold standard, why central banks want between 0 and 2% inflation. It's an incentive to invest your money in bonds, stocks, real estate. It's an incentive to spend your money in order to drive consumer demand, to stimulate the economy. And we definitely don't want deflation because people with money, people with assets will then just hoard their wealth because they know that it's going to be worth more next year. So I would never recommend going back on the gold standard. I also don't recommend investing in gold. However, Russia's thirst for gold right now is simply due to diversification. It really doesn't hurt to have gold long term, as it is a store of value, usually better than just whatever your currency will float at. And Russia's future right now is really uncertain. Russia is about to default on their foreign debt. They have the money to pay this, but the West is making it very difficult for Russia to make these payments. The objective here is to destroy Russia's business reputation and economic standing in the world, so nobody will want to participate or help the Russian government or Russia's economy. So let's now go back to the price of crude oil. And crude oil currently is at $111 per barrel. And I think in order to end this war in Ukraine, in order to bankrupt the Russian economy, the Russian government, the Russian military, the price of oil needs to come down. This is what is keeping the war going. And if we can get the price of oil down to potentially $50 or $60 a barrel again, we were just there in 2019, 2020, then Russia's not going to be bringing in enough revenue from exports in order to keep this war going. Now, as far as their gold exports, I think China will continue to buy their gold exports. Same thing with India. I think India is more than happy to continue buying Russian gold. But what the G7, what the West has done by kicking them out of Western markets is they're forcing Russian gold exporters, gold miners, to sell their gold at a discount. China and India will only buy this gold if they get it at a discount because the rest of the world doesn't want to touch it. Funny enough, India is currently doing this with Russian oil exports. I told you, the price of oil is currently $110 a barrel. Well, India is telling Russia, we're not going to buy your oil unless you give us a 30% discount. They're only going to buy Russian oil if they can get it for $70, $80, or even $90 a barrel. So India and China, yes, they're not participating in the economic sanctions on Russia, but they're also not really helping Russia either by ripping them off and insisting on a 30% discount in order to take their exports. We don't know what the price India and China are paying for Russia's gold exports, but I imagine similar to oil, they're going to rip them off and insist on a 20 or 30% discount than the fair market value that the West would pay. So it's just interesting. It's kind of funny, are these really friends when friends won't give you the fair price for your exports? Something to think about. Okay, everyone, if you enjoyed this video, give me a thumbs up. Really helps out with the channel. If you have any comments or questions or know something I don't, let me know down below. I love hearing from you guys. Till the next video, take care, be safe.